My mission is simple, to make you money. I'm here to level the playing field for all investors. There's always a bull market somewhere, and I promise to help you find it. Mad Money starts now. Hey, I'm Cramer. Welcome to Mad Money. Welcome to Cramerica. Other people make friends. I'm just trying to make you a little money. My job's not just to entertain you, but to educate, to teach you. So call me at 1-800-743-CNBC. Tweet me, Jim Cramer. Froth. Froth is such a bummer. It's the most disconcerting kind of sentiment, even as it can be mighty enjoyable when you're in it.
House of pleasure.
We hear that we've been up, say, for 14 of the last 15 weeks, and that hasn't happened in more than 50 years. But no one thinks that's positive.
The house of pain.
Everyone thinks it's a bad sign. Over-enthusiasm. Too much exuberance. And I think that that's a big reason why the averages only pulled back today from some very strong footing, with the Dow advancing 126 points, just be dipping 0.09%, NASDAQ declining 0.3%. We do know that there are individual signs of excess. So why don't I just tick some down that are, I'd say, pretty glaring to me? Let's start with ARM Holdings, the semiconductor design company, which was at $70 just 10 days ago. Today it touched $164. I mean, they had a terrific quarter, but I say, give me a break. That has to be market orders coming in, not limit orders, which I like, but market orders, kind of like what we saw in 1999 and 2000, no discipline and a lack of stock for sale, because about 90% of the float is still locked up, like 1999 and 2000. Now, the people who are buying ARM up here truly have no idea what they're doing. They aren't sheep. They just have no discipline. When you see that, it makes you feel like something is very, very awry, and the bulls are running way too hard, even as the company is fantastic and profitable and terrific. Now, we got this other thing going. We got a parabolic rally in the NASDAQ, meaning it's going straight up. And parabolic moves are never, ever sustainable. Not rarely, never. Our friend Carly Garner, who's made a ton of great calls of late, points out that we saw an almost identical pattern at the end of 2021. Ooh, soon after we were crushed, just pulverized. Of course, we may not repeat the pattern. And maybe this will be the time when we defy every single red flag. But better not to see the red flags at all, isn't it? We know that some stocks have gotten to levels that no one thought possible. Exhibit A is longtime Cramer fave, Nvidia. Now, I've been operating on one assumption that has just been so right. Own it, don't trade it. But this weekend, a bunch of my friends took me out for a terrific birthday dinner. Nvidia came up. One of the couples discussed it, admitting that they expected to go back to 400. Maybe they could pick some up then. Well, now it's at 722. Oh, they were convivial about it, but I was asked, would I buy it here? My answer, own it, don't trade it, was not responsive. I just didn't want to say, go buy it. Now, you probably think that's a contradiction, right? If I say own it, don't sell it, then shouldn't I be saying buy it right here? In truth, what I'm really saying is that this latest rally feels unsustainable to me. And if I'm right, you'll get a better entry point. But when I read all the recent blogs and statements from Jensen Huang, the Nvidia's Renaissance man CEO, where he says that things like every country needs an AI strategy, I can't disagree with owning it. I mean, don't you want to own a stock when you read a headline that says Nvidia partners with India giants to advance AI and world's most populous nation? Or Canada partners with Nvidia to supercharge computing power? Or how about AI to see major second wave? Nvidia's CEO says in a fireside chat with Iliad Group execs. I mean, how can you say no to having Nvidia in your portfolio when it practically owns the most important space in the world, the generative AI space? Think of it this way. All computers need to be made faster. Only Nvidia, and to a lesser extent AMD, can actually make the big devices run fast enough to do generative AI. So how on earth can you stop this thing? Well, yet all I heard today was that Nvidia is too hot, too frothy. I mean, I don't know. It's tough, isn't it? What do you do if you're on the sidelines with this one? Now, if you're waiting for a pullback, you're basically betting that Nvidia has a weaker than expected quarter when it reports Feb 21, something that'll give you a nice entry point. But if Nvidia reports a weaker quarter than expected, who the heck will want to own it? See, that's the problem with kind of a parabolic move. It forces Nvidia to continue to deliver incredibly robust numbers, or else its stock will get derailed. What we really need is kind of a quiet period like we had last year when it did nothing but digest. So in the end, what I did was I punted. I said it was up to them. I mean, that's about as helpful as that muff punt from San Francisco in last night's big game. But I just didn't want to encourage anyone to buy the stock up here because my discipline says you have to wait until a parabolic move runs its course. And this one has not run its course yet. Then there's the tale of Diamondback Energy, simple FANG. Here's an oil producer who just bought a private alpha called Endeavor Energy for $26 billion in stock and cash. Now, there have been a ton of deals in the oil patch, too many to even name, including many stock-based transactions that have really hurt the stock of the acquirer. Not this one, though. Diamondback stock jumped 9.4% today. Sounds great, right? Not so fast. I think that this deal is no better than the other oil mergers, but nobody got excited for them. The fact that the acquired stock went higher is to me a sign of animal spirits gone wild. Or how about the random rallies in stocks with no news whatsoever? I like Airbnb for ages. You know that. Probably its biggest backer. But here it is. Today up 4.2%. I don't feel vindicated. When a stock rallies on no news, I have to question whether things are going too far. I mean, that means it's pure momentum calling. At the same time, though, momentum can always last longer than you think. Oh, and when you have a big cap stock like Lowe's jumping 3.4% on a simple hold to buy upgrade, well, that's pretty darn foily, too. I was intended to do a piece on Lowe's for tonight's show. But as I watched the stock go higher, I said probably irresponsible to come in on top of that. Now, I've heard the endless comparisons to the dot-com era 25 years ago, the one that sent us in the wilderness for ages and ages and lost a generation of investors. I think my bona fides are pretty good here. My hedge fund had a bang up year in 2000 when the market was headed south, and I also created an internet company, TheStreet.com, which was part of the run-up. If you read Confessions of a Street Addict, my autobiography, you can tell that I knew the dot-coms were about to blow. There was huge insider selling every single day. Sell. And there was just, it was endless. And there would have been a lot more if it weren't for lockups. Like, remember what I mentioned with ARM? Most of the companies disappeared during the prolonged decline that followed, more than 300 of them. The vast majority of the dot-coms had no earnings or even plans to have earnings. They were worthless pieces of paper masquerading as shares in real enterprises. That looks nothing like today, though. These days, the stocks that have been flying, they belong to companies that are ridiculously profitable. We just can't tell how to value them. Maybe they look expensive there, but what happens if they're just big as, it's all get out in 2025 earnings? So where do I come out? I'm convinced that you can't end this move without a huge wave of selling, and that huge wave will not be created by the cautious and the prudent, the ones who quietly pulled out of this market already. It will bend, but it can't break with this level of skepticism. Things like the comeuppance of commercial real estate, if there really is one, won't kill it. A really terrible red-hot CPI tomorrow won't obliterate it. We're going to need to something's got to go really awry, really wrong, to bring out enough sellers to knock stocks down and keep them down. Of course, history says it can happen, but well, the bottom line says without huge chunks of selling, we aren't going to have that decline. Too many people went in and haven't had the chance. Too few want to get out. Who wants to walk away from a hot head, a hot table, a hot dealer, and go buy that cashmere sweater I always talk about? Nobody, even when it's probably the responsible thing to do, at least for some of your cash. Let's go to Trey in Texas. Trey.
Jim, thanks to your guidance, I made my final student loan payment today at 33 years old.
Wow, that is fantastic. Thank you and congratulations. You're a good man. What's going on?
Well, regrettably, I bought 2 nosebleed Taylor Swift tickets in late 2022 for $180,000, and I'll likely pay on those for the rest of my life.
Yeah, you might have overpaid those.
Huge winner. Yes, sir. A Super Bowl champion of a stock's what I'm looking for, Jim. Does Darden Restaurants get a ring?
I happen to like the casual dining space. Believe it or not, I like Longhorn more than Lauren Steakhouse. I like that. I've been, here's the problem with Darden. It is there are a lot of companies in that space. But I will say this, 3% yield, 18 times earnings. I think you'll make money, and that's what matters. I want to go to Glenn in my home state of New Jersey. Glenn.
Hi, Jim. Thanks for taking my call. It's first time.
First time? Maybe a long time?
Yep. Yeah, I've been watching you a long time. You were actually a lot heavier back when I first started.
Oh, I was 205 to 210. Okay, and now about 40 pounds less than that. So thank you for noticing. But I'm also 3 inches shorter.
Me too. I'm the same age. I'm a permanent club member, Jim. The best investment I ever made in my life.
Fantastic.
Anyway.
Thank you, buddy. Thank you very much. We try hard. We got the meeting coming up. I work for all weekend on a lot of club stuff other than when I watch my Chiefs win. What's up?
I don't know how anybody works as hard as you do, Jim. Thank you so much.
Well, you sound like my daughters who are over. They said, Dad, stop it already. Let's watch the Society of Snow. That was an uplifting movie.
All right, Jim, I got a quick twofer for you. I hope you don't mind. Is there any price that you would think about trimming the Nvidia? And what is your long-term on Wells Fargo? Thank you,
Okay,
sir.
I say own it, don't trade Nvidia. I think that the company's doing things that I can only dream about. I know it could have the same period like it did, but for much of August last year to the end of the year, where it did nothing. And that's what I really want. Wells is different. Charlie Scharf is so good. By the way, he's on the board of Microsoft. He's a real smart guy. I think that should be bought right here, right now. And thank you for the incredibly kind comments And boy, we got really good callers, I got to tell you. Fantastic. Anyway, let me tell you something. We're going to need something to go really wrong in order to bring out enough sellers to knock stocks down and keep them down. Of course, history says that can happen, but without huge chunks of selling because something is very awry, we're not going to have the kind of decline where you can just be able to say, oh, now it's safe, let's go in. Mad Money tonight, we've been looking at the potential in the solar space, and I've spotted one under the radar play with a huge market share that could be worth watching, and it's really cool. Then you called and you stopped me in on DigitalOcean. Tonight I'm going to do my homework, and we've been focusing on some emerging mega trends. Tonight I'm learning more about TT, Trane Technologies, see how the company is benefiting from decarbonization, digital transformation, and much more. So stay with Cramer.
Don't miss a second of Mad Money. Follow @Jim Cramer on X. Have a question? Tweet Cramer. #MadMentions. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.